Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Welcome to Energy Unplugged. I'm Julia, who's Aurora's head of USA East. I'm really excited for today's conversation. I'm joined by Julien Dumoulin-Smith, someone who I think thinks incredibly deeply about power markets and utilities across the United States, but frankly also has really consistently thoughtful insights about the state of power in the U.S. and where we're headed. So really excited for our conversation today. Welcome, Julien.
Thank you so much, Julia. Appreciate the opportunity to chat with you today.
Julien is the managing director in Bank of America's equity research team that covers U.S. power, utilities, and alternative energy. He's a double-ranked number one analyst in both the utility and alternative energy categories of the Institutional Investor All-America Research Poll for several years running, including being inducted in 2001 into the Hall of Fame for his cumulative successes in these categories. Julien also has a BS in applied math and an MBA from Columbia University. And I've had the pleasure of reading and hearing about some of Julien's team's perspectives over the last couple of months and years. And I think you'll agree with me that it's an absolute privilege to get to hear some of his insights. So without further ado, Julien, I certainly won't put you on the spot today for any investment advice, but I know you think a lot about the energy sector through the lens of equity valuations. And so I'm really looking forward to getting your view on power in the U.S. from both lenses, really from a market perspective and from an equity perspective. Let's start maybe on the personal side, Julien. You're working in a very exciting space and yet somewhat niche, right? You've got to be passionate both about the power and utility side, but of course also about the equity research side. So what drew you to that space and what keeps it exciting?
Yeah, what drew me to the space, think about this, right? The industry itself is the confluence of energy technology change in society is happening and manifesting here. A, B, you've got an industry that is at the heart of social change, right? In some respects, this is one of the most controversial subjects, one of those dynamic in society, right? And when you think about it, there's nothing more exciting, right? From my perspective, there's a few critical issues that face society, and this is one of them, and it's incredibly dynamic. So it keeps you interested. And in fact, I keep telling myself, I'm going to keep doing this until the week I wake up and I'm like, you know what, this feels repetitive, but every single week is different. Every twist is remarkable, week on week, all the time. And so I am just as motivated today as when I started.
That makes total sense to me, Julien. And you know that I started my career in management consulting. And in fact, when I moved to Houston, I said, I'm willing to work on absolutely anything but energy. That worked for a couple of years. I got pulled onto my first energy project and I absolutely fell in love with it and said, this is where I want to spend my career. This is probably the fastest changing industry that I've been in, but also, like you said, one of the ones whose change impacts all of us on such a fundamental level. So I can certainly understand where you're coming from and why this is such an exciting space. When I teed us in, I said, Julien, obviously I shared a little bit about your incredibly successful career so far, and you've led a couple of teams that have been just really, really good at what they do. So looking back on that storied career, any calls that you think about that you feel like are particular highlights where you said, wow, we really tapped into something there, maybe unexpected or we're a little bit ahead of the curve?
Yeah, just to stick with the personal real quickly. I think the key moments, right? This is more of an investing observation than it is in the context of energy is, these moments of liquidity, these downturns in the economy create the biggest ripe opportunities, right? Both to the downside and the upside, right? I think those have been the moments, the highlights of my career thus far, right? 2008 was a highlight in seeing the market and really how financial markets and seeing their limits manifest themselves, right? And again, just in the mid-teens as well, right? The same dynamic played itself out, right? So, for as much as Constellation and Sun Edison were terrible moments for the industry, I think they also illuminated and created great opportunities all around. And I think the industry has gotten better for both ultimately through time. So maybe I can leave it there, but I think leadership has been, I think the leadership across the industry and frankly, it has been for myself has been just one of those rewarding elements of my experience cumulative. The highs and highs and the lows are lows. And I think like the lows have been the most dramatic and most informative and the most educational experiences out there. And I think you got to really look at those opportunities as opportunities to really seize upon and learn from, right? Whether again 2008 or 2015 or what have you, with Constellation or Sun Edison or what have you. And I think those have been career defining for myself, right? Capitalizing on those moments to lead thoughts across the leadership have been the most successful moments, I would argue, in my career in creating a name for ourselves in the investment space.
I love, Julian, that you're pulling in the long-term perspective when you talk about these short moments or short-term moments of difficulty, because certainly when we speak to developers or IPPs that are thinking about where they are today, a lot of times there's fear, right? Of in the immediate, what can we do now? Has everything stalled essentially? And like you say, there's always a future. There's always a long term where we're headed. And it makes a lot of sense to me that that's where your strength has been, to be able to look past that and say, where does that mean we're going in a couple of years from here? You know, we spoke about some low points, though. Obviously, we have to highlight that right now is very much a high point in U.S. power and utilities. It's tough to have a conversation right now without talking about the Inflation Reduction Act, and I'm certain that will come through throughout the conversation. But maybe let's just start there at a high level. As somebody who's been covering and thinking about power and utilities for several decades, like you just talked about some of the major events that you've already gone through in your career, what would you say is maybe fundamentally different now? Or if it's not fundamentally different now, maybe what are a couple of the things that have truly changed and how you're thinking about this space since the passing of the IRA?
Yeah, I mean, I think the key point that people are missing is since the passage of the IRA, and it's really becoming increasingly um, elucidated, is the point on execution, right? Like, I think there's a tension here in the economy where, you can throw subsidies at you can throw money at a problem, but that doesn't necessarily solve it. And I think what we're seeing here is the IRA is a manifestation of the government and the intention of the people to move forward on this subject. But I think the biggest tension out there is society ready to adopt these technologies? And I see that cascading itself and manifesting itself across every iteration of technology. And I know that's not exactly what you were expecting, but in summary, it's the single best way to characterize this, right? Like, I think the ability to execute on what the IRA portends right now has been incredibly challenged. And I think that recognition is not quite there. Again, if you look at the data points on the ground, you'd say, it's funny that the outlook in the near term isn't better. But I think the bigger challenge as we look to ramp up into the next few years is going to be, can we actually do that? Can we actually interconnect that? Can we actually source in a fair and equitable way that society deems acceptable the resources to actually make this possible? And again, I think land use considerations around where and how we want to permit renewables and other energy technologies writ large is the single biggest issue facing us, and has been put in just the absolute magnifying glass as a consequence of the IRA. And we are not talking about this enough.
It's fascinating, Julian, because when we came out with our first updated forecast post the IRA, we took into account the improved economics, and then we took in the second layer and we said, okay, but realistically on the ground, how quickly does this actually have an impact, right? And I think that we came out a little bit slower and maybe less, still very optimistic, but less optimistic than a lot of what we were seeing. And precisely the points that you're highlighting, right? You and I have spoken certainly to some detail about PJM. And PJM, regardless of how excited you are about the Inflation Reduction Act, you're still waiting for the interconnection queue to come through. You're also dealing with the fact that land is less available and more expensive than it has been, or than it is in other geographies. And so absolutely hear what you're saying. And to me, it tells me that when you're focusing on looking at organizations and your view for the long term, you're thinking not just about do the economics make sense, but you're needing to really have an understanding of how are you running this business and how feasible are the plans that you've announced that you've got for the next couple of years. Another question for you, Julian, it's staying on this US-wide topic. One thing that's particularly interesting about the United States, you'll know that we work with a lot of clients across the world and in Europe as well, and they'll ask us, give me an introduction to U.S. power markets. How does power look in the U.S.? And it's tough to treat it that way, right? Because in some ways, the U.S. is a continent with very different competitive and in some instances vertically integrated regions. So I'd love to talk about that, since you're somebody who thinks about the U.S. broadly and you're needing to think about the impact of this specific market design on the utilities and the power players in that space. So maybe let's start with the difference between the vertically integrated regions and the competitive regions. How does that change things for you when you're thinking about a utility or maybe a developer or just anybody playing in that space if you're in a vertically integrated region versus a competitive region? Is that more risky, less risky? Where would you start?
To me, I'm sort of agnostic, right? Like, it's just the scope of business, how you approach it, and ultimately, what actors you're dealing with. Again, just by way of background, I work across the field. I started my career in power, principally more so than utilities. But utilities have been front and center. And frankly, I would say I'm sort of agnostic. It's just a matter of how you execute. Clearly, there is a lower risk framework in the context of regulated markets, right? Like, it is perhaps a little bit more narrow in the context of what can get done. It's clearly a lower risk framework. And again, you can extol the merits of either way. In an industry that requires and relies on long-term visibility and low risk to enable the cheapest cost of capital, like, there are clearly merits to regulated constructs. And at the same time, in an effort to encourage innovation and sort of, let's call it, mushrooming of opportunities in a lot of different manifestations, I think these competitive markets have proven that time and again that if you give people an opportunity, they will innovate in a number of different fascinating different examples of where they try to bring insight different power assets and effectively re-enable and repower existing power assets. So there's certainly merit.
Tell me a little bit about the risk profile, though, in the regulated area, because you mentioned some predictability there, but certainly I know you're watching the policy space incredibly closely to understand how small decisions, maybe on a local scale or federal decisions, are going to impact locally. So doesn't that maybe even big up the importance of some of those regulatory decisions when you're in a vertically integrated market like that?
Yeah, totally. And certainly, this policy, overlays on regulated markets. Like, absolutely. Like, I get that. I think from my perspective, it's just who you're dealing with, right? I don't fundamentally see them as being impaired and to being able to execute. In fact, I would argue this, right? I think I go back to this land use consideration. The question is, in a regulated construct, are they actually going to be able to deal with the permitting and interconnect challenges in a more expedited way, right? I think that is relevant here, to be honest.
I can tell you're a mathematician at heart, Julien. You're telling me put something into the equation, run the equation, and see what comes out the other end, right? It's different inputs, but the models work the same, right?
Absolutely.
What do you think about the trends for market liberalization? I know there's a little bit of a debate whether we're going to continue to see more market liberalization across the United States. Do you think that's right, or do you think that maybe those concerns or that excitement is overblown right now?
I mean, I think it would. What does it mean? Market liberalization has never been like an obvious term in, I don't call it deregulation. I call it restructured markets, right?
Mm-hmm.
And again, there's not like a black and white. There's a gray zone. All of it's sort of gray. Listen, I don't think it's obvious, and I don't necessarily think it's happening, right? But I think the practical reality on the ground is, because of the challenges in effectively making decisions to move forward, especially around transmission planning and interconnect, it's not going to be an obvious move forward. I think the key angle around restructured markets that one wants to watch, and where you could see greater acceptance, is where and how interconnection is done. That's probably where you see more scrutiny going forward, is the acceptability. What are the parameters of those interconnection requests, right? I mean, I think that's the parameters around that are absolutely essential here. It's not about being restructured or liberalized, what have you. It's about simply being able to readily and in a timely way get interconnection. And by the way, while we're on the subject, interconnection in a world in which utilities are constrained on resources, as it turns out, to be able to address the litany of requests. I think that core tension here is playing itself out in numerous ways.
In some ways, I would read that as a reassuring prospect that if you are looking at playing across several different U.S. power markets, your perspective is, I just have to know the inputs and I have to know the constraints. And as long as I feel comfortable with what those are, you can be successful across the board. Is that a fairly accurate summary? Do you think very soon?
I mean, I think that's fair, but I think you've got to be sober about the realities that I think the connection issues could become more acute and worse and more problematic before they become better. I think the cascading issues on permitting of transmission and environmental permits remain front and center, right? And one sort of falls out of the other. Transmission and permitting around that falls out of interconnect, and so they're clearly interrelated. So at times we talk about permitting reform and we talk about interconnect reform as sort of isolated subjects, but I increasingly sort of view them as intertwined, and critically so. But ultimately, the output here is, as you say, greater challenges to execution and needing to be tightly aligned, right? And for developers and those looking at the industry to get involved in power to understand the absolute criticality about teeing these things up ahead of time and understanding the paradigms that you're entering into, not to be naive about the challenges that face them ahead.
Understood.
It's these challenges that define successful developers versus less successful developers.
Understood. In PJM, we're going through a huge redesign of the way that the interconnection process works right now. And in some ways, MISO is being held up as a model of a market that is using, for example, first ready, first served, that's using cluster studies, et cetera, to deal with some of the really challenging logistics of getting projects pushed through. Do you think that's right, of holding that type of model up as an example, or is there another process that you would highlight and say that's really where we should?
No. I think you're exactly right. In a world of looking at trying to expedite, how do we do much more modular, smaller, discrete additions in the form of solar? You've got to be looking at clustering these things together. You cannot look and do grid planning in the way of the past, where these are large single items that can be studied in a discrete manner. Cluster studies are a necessity of the future. MISO is indeed correct going in this direction. The question is, can this itself be improved upon and iterated, right? Rather than necessarily extolling it as the answer, I think it's the direction. Again, I still step back and suggest to everyone that I think the challenges are clear.
Interesting, really interesting. And then the other example that I would highlight, for example, in ERCOT and in other markets where smaller projects are able to push through more quickly, like you said, as we're going through this period of transition from really large thermal projects to a huge number of smaller solar, battery, wind projects, for example. So when you said developers that are going to be successful, are those the developers that are finding those little pockets, for example, of pushing through a smaller project in the short term to more quickly be able to develop, and then setting that maybe separately from their long-term strategy and thinking through, how do I get bigger projects online in the long term?
Yeah, I think that's right. I mean, I really do think that's in the right direction, right? As you say, like, it needs to be more nimble, right? I mean, developers need to think about like what is possible, right? Versus what they desire, right? I mean, I think the grid constraints, developers of power assets, I think increasingly are actually transmission developers at heart, right? Or those that are most successful and understand those limitations. Again, I understand that there's an array of difficulties in executing and engineering generation assets, but I think the most critical ones and limitations actually end up being on the front end. And that's why I think the sort of the paradigm of what it means to be a generation developer is somewhat evolving here from what we might have otherwise understood historically.
Fascinating. I want to stay on that topic of maybe chasing where the opportunities are, like you said, rather than necessarily chasing something that sounds interesting or is a goal. Does that necessarily, you think, mean that the most successful developers or IPPs are going to be geographically diversified?
I don't necessarily think so. I don't necessarily think that there's a merit per se. I mean, I think it's about knowing the local geography. And I don't think you need to be diversified. I think that there's an angle that like you want to think about a multitude of projects because not everything is going to move forward. But I think this would argue that knowing the regional permitting regimes and understanding the interconnection limitations and opportunities in a very, sort of granular way actually has real merits to it, right? So instead of being truly diversified nationally, I think having regional specificity and knowledge and expertise is actually at a critical premium.
That
For
makes
as much
sense.
as we've seen turnover across the industry and specifically the ISOs, I think that's exactly it, right? The know-how of the grid is why these ISOs are seeing as much turnover as they are, right? In some respects. And I
Mm-hmm.
think we need to understand that dynamic here.
Mm-hmm. What about after things are in the ground? You're thinking about your revenue streams coming in, depending on what market somebody is playing in. They're playing across multiple different revenue streams. In ERCOT, we're in an energy only market that might be perceived as somewhat more risky, right? You're relying on some of those price spikes. In a market like PJM that has a capacity market, or in CAISO where you're looking at the RA market, you have a couple of different revenue streams coming in that way. Do you tend to separate those out when you think about really the value of an asset or the value of a company, where you say there's more value maybe to more predictable revenue streams, or do you think they're just different revenue streams and at the end of the day kind of all are created equal?
I mean, let's put it this way. I think that there's probably too much bifurcation across the revenue streams. Listen, I understand that people are going to put different discount rates across thermal assets and coal assets, specifically relative to renewables. I understand that there's a different asset life, there's a different operational risk, there's a different asset retirement obligation that comes with different assets. I appreciate that, but I think ultimately the bifurcation is pretty extreme today. And I would offer this as a critical observation. Those that have access to the grid and are grandfathered into it and can effectively repower and reposition their existing portfolios towards cleaner electrons and storage units are those that are probably understated value. The value of grandfathered capacity injection rights into the grid is essential to understanding who holds value, especially in a grid that is so critically constrained and where transmission interconnect comes at such a premium today.
Makes sense. But then back to your earlier point, like you were saying, the ISO also has to play nice there, right? And have the right policies in place to make that easy to do, to use those rights and bring online new capacity in that same spot. Julien, one thing you just mentioned, the value of companies that are able to transition to having greener electrons. I would say that that's maybe a story that we've been hearing, that there's higher valuations all around for companies that are looking at clean tech, maybe particularly compared to traditional oil and gas or thermal technologies. What's going on there? Do you think that those renewables really are a safer bet, or is there something priced in there in terms of excitement or thinking long term about the future of where things are headed?
I mean, listen, I think the growth trajectory for the space is long and tangible, and that's clearly being reflected out there. I mean, let me be a little bit more precise about this. There is a clear argument about renewable development today that will cascade itself in other sectors, right? I think for as much as a traditional renewable developer today may be more narrowly focused historically on selling to utilities or today to corporates. Tomorrow, I think this notion of electrification and having an ability to sell into transportation markets, I think is another angle, right? Whether it's hydrogen or contracting with EVs, et cetera. I mean, I think the bigger backdrop of the eligible customers, call this an expanded corporate strategy, means that the growth trajectory is there. And that's a lot of the vibrancy and elevated valuations that we're seeing today is because of that versus historical trends. Right. Expectations for hydrogen to manifest itself in a multitude of new renewable deployment opportunities. I think, again, I go back to this key question. What is socially acceptable from a permitting perspective, et cetera? And I think the derivative conclusion that comes off of that at times I've struggled with in my career is what is the role for distributed generation? And I mean that in every form. But as society has been sort of intractable in dealing with these core questions of permitting and execution, the necessity of pivoting towards, or even perhaps not even the necessity, but the attractive appeal about simply having an answer nearby grows. And in spite of sort of the clear-cut economic case of doing energy at scale, I think the realities on the ground would argue that, you know what, you go the other direction because it's simply easier. And I think that's what we're seeing today. And I think that reality is going to become all the more prevalent. And I'm not saying that this world and grid is heading towards a disconnected world. By no means. I think the grid is going to be as interconnected as ever. And this notion about, quote unquote disconnect is truly disconnected from the realities that we see on the ground. The reality is, though, if you can't get enough from the grid and you want to do things on an expedited basis and you can avoid some of the grid charges and fixed charges, that's why you trend towards distributed solutions.
Yeah, understood. And I'm hearing a really clear through line in what you're saying of that there's probably not that much value in saying, this is what I'm good at, this is what I've done for the last decade or so, so let me stick to this one technology that's worked out. But it's really about being close to the ground, understanding realistically what are the solutions that I can put into place in one particular. What are the solutions that I can put into place and be a little bit creative and push the envelope on what's worked in the past and the type of solution that we need in the future? Do you see that those types of solutions that you're talking about, like distributed generation? Do you think those trends are moving in the same direction across the US, or do you think that things will start to diverge across the different markets that you cover? Because certainly they're not starting from the same point, and they're very different markets. And going back to your earlier point, they certainly function very differently in terms of bringing online electrons or even operating the markets.
No, I think let me rephrase it this way. Right. There are clearly dense urban geographies, right? And Europe can be used in the same analog. High population density does not align itself well with shifting land use considerations that drive themselves towards large scale transitions in how we source energy, right? And so it's the population centers that are the most intractable in how we make this happen. Again, I don't mean to be pejorative about it, in as much as I am identifying that as the biggest challenge, right? I think it's geographies that have the most, straightforward an abundance of land and land rights that make this, the most readily executable.
Makes sense, and it certainly mirrors some of the conversations I'm having with developers that are looking at Texas, for example, saying there's easy land available here. Let me figure out a model here, and maybe are shying away from some of the more densely populated parts of the country as well. And I absolutely hear you on the fact that, test a model that works maybe in Texas, and then get creative and figure out what works maybe within Texas. And
Yeah, I think the West writ large is going to be is the opportunity and is ripe. And I think the question is going to be, especially on federal lands, how that permitting regime evolves. I'm not particularly opportunistic about widespread permitting reform, particularly because it's such a thorny issue if you open up Pandora's box about what kind of federal permits you're addressing. But I think the critical question in front of us is if you can look at an evolved regime on federal lands, or more specifically on state lands, and where land rights are straightforward. I think that's really where the opportunity is, right? Because the economics are pretty clear cut. And especially where interconnect is certainly enabled by utilities, I think that's where you have the most ripe backdrop for expedited renewable deployment, especially in this environment where the economics are now readily clear cut.
And you've highlighted something else I think that tends to maybe scare off people who haven't been active in the US markets before, is that you're looking at federal policy, you're looking at state policy. In some cases, you're also looking at regional policy on top of that. And you're needing to keep a clear eye on all of those and understand how to navigate permitting policy, et cetera, at that level. Julien, let me pivot us briefly onto some of the technologies that we've started to speak about, and that you and I have had some conversations about, and see where you stand on the future of a couple of key technologies. Let's talk about batteries first. It's a trend that has seen huge momentum, especially now with additional tax credits from the Inflation Reduction Act, and seen as a major way to keep the grid stable with more renewables coming through. Is that a trend that you can get behind? I mean, certainly batteries tend to be risky. There's typically more exposure to merchant risk. You're more reliant on price spikes. Where do you land on the future of batteries in the short term and the long term?
Yeah, I mean, here's what I'll say, right? Clearly, they make a piece of the pie, right? If I'm saying nothing else, and let's be very clear about it, we talk about like an above all strategy all the time, diversity. Like the need for diversity, given the inability to execute on any specific technology or plan at once in a sort of unpredictable way, requires an even more nimble and wider array of solutions before us, right? Like I am absolutely emphatic on that. And when it comes to storage solutions, there's a range of opportunities that make a lot of sense. And the economics have been dramatically shifted. And I think the single biggest dynamic that we were looking at here that is challenging, and we're working very closely with our materials partners, is on sourcing, right? Sourcing on a timely basis, and the trade considerations are absolutely essential. And you cannot be naive that permitting, that sourcing regime is going to evolve. And I think you cannot be naive to think that the permitting, the ability to adequately access adequate reserves is going to be timely. I think that's where the big risk is to the downside. I think there's a big tension today between grid scale and EV adoption. And as one perhaps slips a little bit, one could benefit. And certainly I think we're seeing that on the margin. But the bigger question is, can we really bring on the resources in time to ensure competitively priced resources here? I think that's going to be an incredibly important question over the next 5 years. That all being said, I think it is clearly coming ahead, right? I think this is where it is going in many respects. And I think to preempt the question, where are we going with respect to other storage and long duration solutions? I think a number of them are going to work. I think it is clearly not necessarily prime time thus far, and I don't think the grid necessarily needs long duration. And so I think there's this pressing question constantly asked about, do we need to answer that today? And I don't think the answer is yes. I think you need to deal with the intermittency and the signals that you're seeing today. And as you lean into the technology will arise to the occasion. I think what has been consistently underestimated in the space, and batteries are a great representation of this, is that technology adapts. Society doesn't appreciate how quickly technology adapts. And we've seen the technology radically transform in this space in a short period of time. The pace of innovation remains robust. The global competitive sphere on which every continent is competing for the future of energy technologies is robust. It's transparent to me in my capital markets role. And I think many should trust in what can be produced, because many of the nascent technologies of today might otherwise appear to be science experiments, might otherwise appear quite credible in a prospective deployment case.
Well, when you talk about the speed of things changing, you're certainly pointing to the fact that our job as forecasters is a tough one. Julien, we've got
In fact, let me just offer this, if I can, just quickly. CCS, carbon capture. Like you talk about batteries, I would offer this, that like I think the role of where we are going and the diversity of what's on the table, I think you got to be cognizant that CCS is potentially a credible avenue that we're going to continue to see here. And this notion about having that be an economic direction for at least a mid-scale decarbonization scenario appears ever clearer to me. And again, that is all premised on and based on the improvement in the underlying CCS technologies that we're seeing today.
Certainly. And it's something we're consistently thinking about, building those types of new technologies into our forecasts. We can't reliably build in CCS right now because it's just not proven. But if you're thinking about your long-term economics, you have to be considering both scenarios, right? You have to be considering the future where the CCS build out just absolutely booms, and you have to consider the future where it takes a little bit longer than you might have expected. Julien,
I think the regime with IRA is clearly changed the game on CCS, but it does for a lot of other energy technologies. That's why I think, again, I stress you got to open your mind to the diversity of opportunities that the IRA affords you. And where you might have been skeptical in the past tense, I think you need to revisit what is possible today.
That's great, Julien. And I love ending on that really positive note about all the doors that have been opened now and the opportunity that you see for the future. So while you've raised some of the challenges that we're looking at right now and the difficulties of really actually getting new projects online, really love thinking about how things could change and the positive momentum. So Thank you so much, Julien. It has been a really fun conversation from my end and really dynamic thinking about the spaces that you're watching. I hope everybody else has enjoyed taking the tour around the U.S. with you as much as I have. So thank you very much for your time today, Julien.
You're very welcome, Juliet.
That was Julia Hoos, Aurora's head of USA East, talking to Julien Dumoulin-Smith from Bank of America Securities. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening and goodbye.